As well, the stock has spiked to the day's high. It's up 1.5% as we speak. So, of course, that big beat is... Okay, all right. Abhishek, tell us.
NII is at 41,655 crores. We're working with a number of 40,887 crores. So it's a beat of about 1.9% to the NII. Asset quality seems to have improved massively. 2.24% on gross NPA ratio versus 2.42% in the previous quarter. Net NPA ratio is down to 0.57% versus 0.64% in the previous quarter. So it's a top-down beat that has come in from SBI with respect to PNL and asset quality so far.
Okay, all right. So we'll look for more details as well. So far, it has been a beat, and as Abhishek pointed out, it's largely because of the NII beat as well. Gross NPA has improved to 2.24% versus 2.44% on a sequential basis. The net NPA has come in at 0.57%, which compares with 0.64% on a sequential basis, and the net profit growth that has come in, as Abhishek explained a while back.
You're absolutely right, and as we see the numbers flashing on the screen, there's been a significant outperformance as far as the stock price is concerned. Just prior to the results, the stock was at the day's lowest point, now up almost 2.5%. But we have Rahul Malani of Sharekhan joining us to react to the SBI's numbers. Rahul, how do you look at it? It appears to be a beat on all fronts.
Yeah, good afternoon. So basically, previously the expectations was that the weaker NII growth was expected due to the lower names. Expectations was that there will be a decline of 5 to 15 basis points quarter on quarter. It seems that there could be some one-off in the NII line item, but the actual number of the core NII NIM would be monitorable. Number would be monitorable in the presentation.
Okay, yes.
There's no one-off in the NII as far as the calculation goes. I'm seeing interest on income as well as advances or investment, or take a look at others also. There's no one-off in the NII as far as I can look at the numbers.
Okay. All right. So no one-offs as of now on the NII. So definitely looks like a big beat. We also have Prakash Diwan joining us now. Prakash, we were talking about Asian Paints, which was a miss, but SBI looks like a big beat. What is your first take?
No, absolutely. I mean, I don't know if there's no one-off. This seems to be a significant beat. 7,000 crores more than what we were anticipating is definitely something which we need to figure out. Of course, in a good way. But what could possibly have happened is that they've got some sort of accounts in which they would have recognized, income which they've not done, let's say, in the past. It happens, last quarter would have been typically when, a lot of adjustments would have happened. March end would have brought out that. And if that is the case, if we can kind of, understand that from the management, then you'll be able to attribute this beat. But, the worry that was there in the SBI numbers related to names and related to cost of deposits going up and all that doesn't seem to be translating into these earnings at least. So which means that they've figured out some way to get over this tough quarter, tough patch that was anticipated. But this is significant beat. Even if you just look at NII, profit is 7,000 higher, but NII also is decently up from what we were anticipating at 40,500 crores.
If you take a look at the business momentum, that's very strong, at least on the advances growth front. So take a look at the deposit growth, 11.1% YOY and 3.5% sequentially. Motilal Oswal was working with these kind of numbers on the deposit growth, 11% YOY and 3% sequentially. However, the advances growth are robust at 15.8% YOY and about 5.24% sequentially. Now, analysts were pegging a advances growth of 14% YOY and about 3% sequentially, 3.5% sequentially. So the advances growth are much better than analysts' expectation, which can be seen with the fact that NII growth is robust. They have been able to control their cost of funds. 3.45% growth in deposit has not led to spike in interest expenses. Interest expenses are up 3.7%. So stable, in terms of asset quality, and strong loan growth augurs very well for the Q4 FY24 that we are seeing so far.
Rahul, just to get back to that, how are you looking at the deposit as well as advances growth? What is it that you are working with, and how has it come compared to your own expectations?
So basically, advances growth has come in above our estimates. We were penciling in 3% quarter-on-quarter advances growth, and deposit growth has been also slightly higher than our estimates of 3% quarter-on-quarter.
Okay, so both advances and deposit growth has been higher. Prakash, your take? We were talking about what would have happened. So even the business momentum looks really strong, as Abhishek pointed out. Was it expected? Do you think this is a performance that could continue?
No, that's the interesting part, Sonal, because on a big balance sheet like this, if you anticipate momentum to continue, it would really mean the bank is doing something very right. Because we've not seen this happen elsewhere, in such a significant way. So I'm sure they've managed to do what maybe an HDFC bank is striving to do in terms of cost of deposits to be benign and advances growth to be fairly spectacular. But let's also understand the fact that SBI has been very active in certain newer segments, which could have led to this growth in advances. My gut feel. We'll of course have to wait for the fine print to see where it's coming from. But last week, earlier this week, when you had the Canara Bank numbers, that also told you how some of these banks have been able to go deeper into some of the segments and bring about growth in an environment where growth has not been so forthcoming. So from that perspective, it's definitely a surprise, a good one. Whether it continues or not will depend on what's the strategy and whether it's part of some sort of a strategic shift that the bank has done in terms of its advances book. So we'll have to wait for that. And also the quality of the book is fairly distinct, which is interesting that the quality has not gone down. NPAs and the numbers don't tell you that there's any worry on that front in terms of what they're growing with. They're not growing at the cost of compromising on the quality, which is even more impressive.
Well, the loan growth that we are speaking about 5% sequentially is one of the best growth that SBI has seen over the last 8 quarters at least. So despite the fact that, in the previous quarter, they had grown about 2 to 3%. This time around, it's at 5%. Q4 is seasonally a strong quarter. Last quarter, they grew by 5.2%. So the strong loan growth momentum has continued for SBI, along with the fact that deposit growth is there, and they do benefit from the low domestic low-cost low CD ratio, that is credit deposit ratio. So they are able to grow faster with respect to loans over deposits, and that is actually playing out very well for them. So it looks like a strong loan growth. Control over asset quality, gross NPA ratio and net NPA ratio are perhaps one of the best that you are seeing in last 9 years or even more. So 36 quarter low with respect to gross NPA and net NPA ratio augurs really well for them.
Okay, all right, Abhishek, thank you so much for joining us with that take. So SBI's numbers strong, much better than anticipated. The asset quality has improved and the deposit and the advances growth has been the best in many quarters. Gentlemen, thank you so much for joining us, Rahul and Prakash, and taking out time to analyze these numbers with us. We'll step into a short break. When we come back, we'll talk about more stocks and the market action as well. Stay tuned for that.